Liquidity! Yo, what's good, everybody? Welcome back to another brand new video today. I'm super excited to have you guys in this video because this video is very important. So today I'm gonna tell you guys about liquidity. So what is liquidity, right? So this is going to be our first class about trading and how can you find liquidity and what is liquidity. Liquidity, so basically is like sell stops and buy stops, like resting orders, and that's what basically it means. Once it has, so like a relative equal highs, I have my screen recording on so you guys can see uh, my chart. So what is liquidity? Okay, so you see right here, guys, this is the trade I took, and this is the highs. Look, these are the internal highs, right? One, two, three, four, five. We have all these liquidity, right? When price makes a high, right, and it it doesn't like push above the last like before high, so that means it's like holding liquidity, and when it takes out, when it goes higher and takes all these like resting orders, what it can do, so people in here thinks that's gonna go higher, so they like buy, and they have their stop loss underneath like these levels, so all of their stop loss is gonna get hit and is gonna go lower, because you see what this liquidity does is it basically gives the market makers a chance to change the direction or move the price in the direction they wanted to go. So that's what basically it is, and we're gonna talk about this video about this trade I took and how you can guys get the same trade, sell it when it's high and buy it when it's in the low. So basically what I did is, and right here we see we have these liquidities. Let me make a mark. We have these liquidities. We have this one. So this is what basically liquidity is, and right here we take all of these, the marks I made, this one and this one, we take it out, right, and we make a fair value gap right here. So what is a fair value gap, right? A fair value gap, I'm gonna make a separate video about fair value gap because it's very important and you need to know what fair value gap is. Fair value gap is with three candles. When you have a non candle that you don't see the high and the low like meet, like you see this one, you see this one, the this one and the low, and you see it has these fair value gap. This is what we call fair value gap. There's no candle inside of this, right? For example, this one right here. Let me make a mark so you guys can understand it better. So right here, right? This is also a fair value gap right here. This is a fair value gap. This is a fair value gap. It doesn't meet. If they meet, then that's not a fair value gap right here. This is a fair value gap, and this is a volume imbalance. You're gonna know that. So volume balance. So why did I took this trade, right? So the reason whenever you take a trade, you have to have a reason why you're taking this trade. If you don't have a reason, if you don't know what you're doing, or if you don't know like how you're executing or why you're taking this trade, do not take it, or you're basically gambling. So what you can do is, what you need to do, you need to study about liquidity, and when it takes a lot of highs, you have to wait for a confirmation. You have to wait, right? So basically, I entered right here with this candle, the black candle. You see this one, because that's the inverse fair value gap. But you guys will know about liquidity in the next video. I'm only talking about liquidity in this video. So uh, this right here, you see, we have a liquidity, and price comes up and makes two two hits. So price makes two hits, and what it does, it goes to the directions. It goes to the direction it wants, to the we want it to go. Like I entered the shorts, and we see that it delivered beautifully. Well, I didn't take the full TP because my TP was to right here, but this TP, it ain't bad, you know. It ain't bad. So we have a volume imbalance right here. We have a volume imbalance right here. So it came and took out all of these. What volume imbalance is like not meeting the candlesticks to each other and being too far. So your entry should be right here. Well, I entered too early because I know where the price was gonna go, and I had my stop loss above the candlestick of the fair value gap, and then boom, you see, there it is. That's the trade, and you're gonna see not the exactly same thing and every day, but I promise you, you're gonna see this exact setup. Not exact, but 90% the same, and every single day. Every single day you're gonna see something like this. So this is gold. This is micro gold. But if you go to Nasdaq, you're gonna see the same thing, bro. You're gonna see the same thing. Let me show you Nasdaq. Okay, so in Nasdaq, look right here. We're gonna see the recent what happened, right? So we have these highs, 1, 2, 3, and we have all these highs, these highs, and then boom, we see a generational wealth, bro. We see a generational run. You see all of these, bro. All of these, bro. This is all like, and look what we have right here, a fair value gap. Let me show you guys. So this is the fair value gap, and we came and took out the liquidity right here, and then boom, there you have it, guys. So I'm not gonna make this video too long because liquidity is basically like the only, like the first concept you guys need to learn, because it's very important. And if you don't know liquidity, you're gonna have a lot of struggles like trading. And if you don't know what price is doing, if you know what price is gonna do, you're gonna make money consistently, wherever you are. But if you don't know how to do that, you're cooked. So so that's all I have for this video, guys. I hope you enjoyed and liked it. Don't forget to like, share, and subscribe because I gotta go to the gym. My brother called me like come because we're gonna be late for the gym. And I'll see you guys in the next video. Peace.